old next month. I'll have an inheritance later on. But, it's like $357 a month. Is that something I should consider?
Are you in pretty good health, Marty?
Pretty good. I got high blood pressure, but that's all.
Yeah. Yeah, so I would, look, here's the thing. It's very expensive, as you noticed. And I would suggest that the key with it, I like long-term care insurance, but it doesn't always accomplish what we think it's going to accomplish. And you really got to buy it right. I think you've got to have inflation protection for sure. That's a rider that's probably not on yours. You've got to have a good daily benefit, a fair amount of money as a daily benefit. And then that protected with inflation. And that's going to take that cost up even higher if you don't already have those things. And so then you've got to weigh the thing of, I might be spending this kind of money for a lot of years, and maybe by the grace of God, I'll never need it. He'll just call me home and that'll be it. But it gives you a good feeling to know that you have it. And if you have a fair amount of money or a pretty good estate, that could be a good estate for heirs, and you want to prevent eating away at that estate if you went in a nursing home, then this could probably help for 3 or 4 years. But at some point, you could still end up getting to that other wealth. So it really is one of those things like you insure for your house burning down, and it may never burn down. Chances are it never is going to burn down. The odds of you being in a nursing home are probably higher than the odds of your house burning down. But it's like every other kind of insurance. You may never need it, but it's great to have because you're shifting the risk of an event to the insurance company, and that's always a good thing. So it really, if that money is burdensome now, I promise you, or a little bit expensive now, I promise you when you're 75, it's really going to be expensive. Mm-hmm. It's going to go up, and right. The vast majority of people will say, this is nuts. I can't afford to pay this anymore. And they stop. So the only winner is the insurance company. They got right. 20 years out of you for payments, and you had to drop it because you couldn't afford it anymore. And so you don't have the protection, and you paid into it all those years. And I'll let Shanna make a comment on that because she comes out of that whole insurance world. She knows more about those things than I do.
Yeah, I think too, you have to really consider what's at risk. So how much of an estate or how much of a portfolio do you have to protect? I mean, if you've got a whole lot of money, you probably don't need it because you can use the resources that God's
right.
given you. If you're on the lower end of it, it's probably the payment is probably going to be too burdensome for you. But if you're somewhere in the middle, that seems to be where it's a good fit. And the trend that I've seen long term, 20 years ago when I got into the business, there were a couple of big companies that, their sales point was we've never raised rates on existing policyholders. Yeah. But in the last 10 years, I've seen that change. And even good conservative companies weren't expecting healthcare costs to inflate as fast as they have. Inflation in healthcare has been much higher than in any other part of the sector. And they've had to either give their policyholders a choice to raise rates right. or cut benefits.
And some of them got out of the business.
Mm-hmm.
Because they couldn't, it was not what they expected it to be. All their actuarial calculations went down the drain. Yeah.
Yeah. They were all very inaccurate.
Yeah, that's for sure. Yeah, so I think Shanna makes a good point. It really depends on where you are Because if you're on the low end of, being able to support yourself, or even in that middle, chances are, you could still outlive in a nursing home your benefits, and you may end up eating into what you have left and could end up on Medicaid, if there's still such a thing back then, then when it happens, but I'm sure there will be. And not really have the benefits you thought you were going to have. Hey, remember to click the subscribe button right here on the screen, and don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.